We make money in three ways. Firstly, we get an acquisition fee when we buy assets for the fund. That's 2% of the cost of acquiring or constructing a new property, and that covers the negotiation, the research that we do to find the property, as well as the management of the acquisition process through to settlement. Further to that, we get an asset management fee of 0.9% of the assets within the fund. The asset management fee covers the management of the whole fund, including all of the properties within the portfolio, to make sure that we're obviously managing the assets in the fund in the way that's best for investors. Additionally, we get a performance fee. And the performance fee requires that we exceed a benchmark that we think is quite a high benchmark. We're targeting 10% per annum, but we need to beat the market by 2%. That means if the market achieves 20% per annum growth, we need to get 22% growth before we exceed that benchmark. If the market gets 6% total return, we need to get 8%. And I should just clarify here that that's total return. It's not just capital growth. And remember that the market also generates, in most investment properties, generate rent as well. So total return for the benchmark is calculated by the capital growth of the market plus the average rent across the Australian residential property market. So we need to exceed that by 2% to get our performance benchmark. We then get 20% of the returns that have exceeded that benchmark. Oh, and we also have skin in the game ourselves. And that means that we're investing right alongside you. So as the fund performs well, we're obviously getting a return on the money that we've invested in the fund as well. All of these fees are set out in our product disclosure statement, or PDS, which you can download from our website.